Welcome to the January edition of the Galileo Capital monthly update. I think it's important in a year like we've had in 2022 just to give you a bit of a wrap up of what actually happened over that calendar year in the investment markets, and then maybe to talk a little bit about what we think might happen in 2023, because I think it's going to be another very complicated and busy year, both in the politics, the economics, and potentially geopolitics with Russia and the Ukraine. So maybe just for a bit of context around global markets as a start, the world markets were down about 20% in dollar terms in 2022. And that is one of the worst years we've seen in world markets for quite some time. The last time the markets were down by this amount was in the 2008 financial crisis, when world markets were down about 40%. The US market was particularly a big driver of what happened in the world, and the broader stock market in the US is the S&P 500, and that was down about 18.5% in dollar terms. The technology-heavy NASDAQ index was certainly the biggest driver of losses over the year, and that was down about a third, almost exactly 33% for the year. And then the US bond market lost the most it's ever lost in recorded history, and that was down about 12.5%. And that's quite an important number from the point of view that bond markets are generally meant to be a bit more stable, a bit more secure than equity markets. And so seeing a loss like that was really significant for investors, especially those that invest in balanced portfolios, where you would normally expect the bond market to be a nice counterbalance to the stock market when the stock market is falling. So for the first time in a very long period of time, we saw the balanced portfolios in American markets actually losing a heck of a lot of money, and probably the worst performance we've seen from a balanced portfolio where you've got 60% in shares and 40% in bonds in living memory in the US markets. So certainly a very big loss in the US market, and that's what drove the rest of the world. Unfortunately, emerging markets weren't protected from those losses, and the biggest emerging market of all was China, and that was down again, and it marks the third year in a row that the Chinese market was down. In counterbalance to all of that, we actually saw the JSE go up very slightly for 2022. So it was up about 3.5% for the year. And that just shows you the impact of the resources market, which saw South Africa performing fairly well, particularly because of the mining sector. And that helped the South African economy as well, where we had quite a lot of additional tax revenue that wasn't budgeted through the year before, simply because we managed to export a lot of commodities last year. On the political front in South Africa, a very important conference happened, the ANC elective conference, and we saw that Cyril Ramaphosa was re-elected as president of the ANC. I don't think that was much of a surprise to investors, although the Phala scandal is hanging over his head still, and that was really the only reason that he might not have been re-elected as president of the ANC. I think what was very important was the election of the top six of the ANC, because that gave us a very good idea of how strong the Zuma grouping, they call it now the RET faction, the Radical Economic Transformation faction was, and certainly only one of the top six would be classified as identifying with the RET faction, whereas four out of the top six are certainly very strongly in favor of the Ramaphosa grouping, and the election of the deputy president, Paul Mashatile, would be the standalone, largely independent candidate, someone who's tried to straddle kind of his own line and walk his own path, and not identify either with the RET faction or the Ramaphosa grouping. I think the only other notable comment from that top six was the very strong showing by the ANC in Gauteng, and certainly a lot of their candidates came to the fore in that election. What hasn't received much coverage politically was the election of the NEC, which is a bit more than 80 people in the ANC, and I think that I did see some coverage from News 24, which I think was reasonably poor, showing the bad grouping of those that were elected to the ANC NEC, with some real crooks being elected. However, what wasn't covered was actually the real dominance of the Ramaphosa faction in that, with probably 60 out of the elected officials, identifying with the Ramaphosa grouping. And I think that that's a very good sign for those of us who are worried that Ramaphosa might be criminally charged in 2023 with the Phala Phala scandal. If that is the case, and he does need to step aside, it does mean that the hand of the reformers is still very strong within the ANC. My last note around local politics is that we are recording this after the start of January, but before the ANC policy conference continues around about the 8th of January. That's very important just from the perspective of we'll see what economic policies they come up with and what are their views on future policies around state-owned enterprises, land reform, etc. So that's likely to attract a lot of noise. I'm not sure how important it will be, given that 2024 will be the next national election, and the ANC's very unlikely to retain a strong 50% plus majority on a national basis. So in terms of the year ahead, what are we looking at? What are we focusing on globally? We still think that US inflation is going to be the biggest driver of economic and stock market news for the first half of the year. We expect that US inflation will start to slow down and continue slowing down through 2023. That means that interest rates might rise at the start of 2023, but likely to peak by half year, around mid-year in 2023. If that happens and stock markets get line of sight that inflation has peaked and certainly continues its decline, then we might see some positive sentiment through the US market and therefore global markets. If you see the polls of investor confidence around the start of January, it looks like it's very evenly split between the optimists and the pessimists. 52% of readers polled by Bloomberg think that the stock markets will be positive in 2023, whereas 48% believe that it will be negative. When you see the polls of investor analysts around Bloomberg, 500 of them were polled, and they're certainly quite negative about the economic prospects for the US, with a lot of them believing that there might be a mild recession in the US, some believing that there will be a very significant recession. As always with polls and predictions, we don't get too caught up in those because we think that those are not always accurate. In fact, most of the time these predictions are not accurate, and you're more likely to predict it correct with a toss of a coin than reading the forecasts. But what it will tell us is the sentiment of investments as the year kicks off, and sentiment is not very positive. So I think that it's worth just keeping an eye on inflation around the world to see what that does. We think that will be the big driver of news and noise in the first months of the year. Importantly as well is the conflict in the Ukraine doesn't seem to be abating, and a lot of us would have predicted at the start of last year that there would be a resolution to the Ukraine conflict, but we can't see one on the horizon just yet. It has had some very unfortunate consequences for investors because those of us who invested some of our money in Russian exchange-traded funds have now got to the point where the indices that were tracking the Russian stock market have been closed to global investors, and investors in those ETFs from outside of Russia have lost all of the money that they had invested in the Russian market. And that's certainly the first time that we've seen the weaponization of the world of finance to such a degree that the Russians also imposed sanctions on the West and shut down access to money in those exchange-traded funds. So this has brought a new and quite scary kind of dynamic in the world of finance, where investors, certainly we're amongst those, will now be very wary of investing in single country exchange-traded funds outside of the very large markets. I think smaller markets now will only be accessed by investors like us as part of a very diversified global ETF, and certainly that tracks poorly both for all emerging markets, but also very specifically for South Africa, where global investors might be a little bit more wary of investing in single country exchange-traded funds in the future. In terms of the South African economy, unfortunately, we're living with load shedding as kind of the norm now. More than 200 days out of 365 with load shedding in 2022, and it's very unlikely that that picture gets much better for 2023. If we see the private power producers that have started building power plants, it takes them at least 18 months to get up and running. Some of those private power plants will be contributing to the grid, but some of them will be contributing to their own power needs in exclusively, which means that it's unlikely that we see much resolution around the Eskom power crisis until probably mid-2024. So for those of you that can, we strongly suggest that you make sure that you're catering to your power needs and don't rely on a resolution to the Eskom crisis anytime soon. We think that that's a major impediment to the South African economy and certainly will be a real lag on sentiment. So a lot of investors are severely affected by power crunch like we've got, and we don't see a big resolution to domestic shares doing incredibly well when we've got these major power outages. One thing we are looking for is in the budget speech in February 2024 is the resolution to the Eskom debt crisis, and I think that's something that certainly will be resolved, and likely that the South African government takes a portion of the Eskom debt onto their balance sheet and leaves Eskom free to deal with the balance of the debt on its own, which means that at least Eskom should have additional money to buy diesel, but we don't think that will be a resolution to the power crisis. In terms of other factors to consider for the year ahead, we think that if we look at the early movements of the rand, it's interesting to note that there's quite a lot of pressure to buy rands. And in other words, that the rand doesn't seem to be weakening at the start of this year, and in fact often has broken the 17 rand level for the first few days of 2023. If that trend continues, it's possible that actually the rand has a fairly decent year, and especially if global sentiment picks up towards the end of 2023 as investors start to buy shares and look for investment opportunities around the world again. So certainly it's not a one-way bet on the rand, even though the Eskom crisis is likely to continue. We just want to remind investors that at the start of the year, you should look at topping up your tax-free savings accounts and retirement fund contributions. That ends at the end of February, so don't leave it to the last minute. You'd probably want to get that done by the middle of the year just to be safe. And certainly for foreign investors, remember that you can now use your single discretionary allowance of R1 million. It starts at the beginning of the calendar year, and certainly take advantage of that as we see a strong rand working in our favor. So for investors in general, we think 2022 was a very tough year. We expect it to be a slightly better year in 23, but we're not in the business of making forecasts, and we'd like to wish you all a very happy 23. Let's hope that things start to improve around the world, and in South Africa that we see reform of our economy continuing to accelerate, and let's hope that we get some resolution to Eskom's problems. All the best, and thank you for your patience through last year. We know it was a very difficult year. We're not forecasting a brilliant 23, but certainly we hope for a better year than last year. Thank you so much.